Welcome to Subramani. Sovereign gold bonds, what I'm going to talk to you about today. Currently it is open. By the time you see it, it would have closed because it opens only for 4 days. That is my crib. But it opens 4 times in a year, right? Every quarter. So you have the issue now in December. So next it should be February or March, maybe it will be February that it opens up again. Sovereign gold bonds are one of the best ways of buying gold, immaterial of what others tell you. So somebody who has an ETF to sell is going to tell you that ETF is more liquid, which it is, and ETF is better, which it is not from a yield point of view. And if you clearly have a 8-year view, SGB is the best in terms of return because government, first of all, it's guaranteed by the government, so you don't have to worry about the asset. Second, it gives you 2.5% taxable interest payable every 6 months. So if you have put say 10 lakhs, then you will get about 25,000 as the interest twice a year, 25,000 annual interest. So 1 lakh, so 12,500 twice, right? So that is how you will get. You can put a smaller figure, you can put 50,000. I think you can put minimum of 1 gram. So 1 gram today would be about 6,100 or something like that. So that is what you can do. Is it safe? Yes, it's safe because it's government. And please remember, these are sovereign bonds. They are designated in gold. So these are like GSEC. It's government guaranteed, so you don't have to worry anything on that side. You don't have to worry whether the government has gold or is it giving or is it a naked shot for the government. You don't have to worry about the other side. Also, it is much better than physical gold because you don't have to worry where to keep it, whether to get a locker, what size of locker. You don't have to worry about any of those things. Can you keep small pieces of gold at home? Yes, you can, and then you can put it in a box and hide it somewhere and then search for it when you need it, right? So those things, physical gold has some risk. Physical gold has some advantages, right? I've heard stories about people leaving Kuwait and coming to India, using gold at every stop, wherever they stop, they use Hindi film cassettes and some gold as bribes to get through faster when they reached some point from where they could fly down to India, right? So some of these things, physical gold has an advantage, but normally we are assuming that even if you have physical gold today, if you keep it in the bank locker, it's not going to be useful in an emergency. You won't be able to get into the bank locker at 2 a.m. and leave the place, right? पलायन करने के लिए भी वो सोना काम नहीं आने वाला है. So that gold is not going to be useful. So physical gold has a lot of risk. And people are now not using it. So if you're just going to keep it as an investment, SGB is far superior. It has a 5-year lock-in. It's a 8-year product. It is a 5-year lock-in. The capital gains in that is tax-free. So the last few investments which I have made in SGB is giving me better returns than debt funds for sure, and sometimes even better than equity funds. There are many reasons to invest in gold. One which I am currently facing is there is too much money in equities that we have put in. So some money which we remove, either we remove or we get dividends. So when you get a big dividend and you don't need that for your household expenses, then what to do with that money? If you don't do anything, it will get plowed back into equity because that's what you know. So it's go back there. This is also, I'm talking now in December 2023, it's a great time to be building your long bond portfolio also. I've done a video on that a few days back. You could have a look. But I am not getting into asset allocation and all that. I'm saying assuming you want to invest in gold, and I always want to invest in gold. Every time SGB is open, I put in a small amount of money. Maybe 50,000, maybe 1 lakh, maybe 2 lakhs, maybe 10 lakhs, but definitely I put in some amount of money into the SGB depending on the cash flow available at that point in time. So it's fairly obvious sometime in July, August, if the SGB opens, there is more money available because the dividends are just trickling in. Sometime now when I look at some return and I look at some small cap fund in which I got 35% return on an SIP over a few years, maybe 5-6 years, then there is a huge temptation to remove some money and put it into SGB. using some SGB for your what I call bucket number 4 for your medical expenses. You put some money in SGB and leave it there, and not that it is ever going to be available in an emergency, but in case of an emergency and you use the money, you say, okay, this money I had kept for my medical expenses. So putting in some money in a separate pocket also is useful. So is the SGB useful? Yes, SGB is useful. What are the advantages and disadvantages of SGB? First of all, a disadvantage of gold is common, right? You know that the price appreciation may not be great. But for me, it is removing some money in equity from equity rather than investing in gold. So it's not investing in gold that I am doing. Removing money from equity is what I am doing, because I have excessive money in equity. So as far as I am concerned, it is removing some money from there that I am doing. It is very tax efficient compared to every other form of gold investment. Physical gold also, technically you are supposed to pay tax, but if you don't pay tax, nobody is going to know. But if you have issued a check to buy gold, the chances are you know you are accounting for it, and tomorrow if there is wealth tax reintroduced, then you will have to account for all that. So if you buy gold in cash, which is one huge advantage of gold, you redeem it in cash, that appreciation is tax free. It's black, but that's not what we are talking about. We are talking of mostly all of us have check money. So even if I were to buy physical gold, I would go and issue a check, or you make a UPI payment. So we don't have cash to do that. So some people who have cash, that may be a good option, but for us, SGB is a fantastic option. You get 2.5% interest, which is on the cost of the gold that you bought. So today, if you buy 10 lakhs worth of gold, you get it on that. If you buy 1 lakh, you get it on that. The price of the gold, change in the price of the gold doesn't matter. The bond value will change, but the interest rate is fixed on the initial amount that you paid. So initially, if you paid 6,156, you get 2.5% on that. You could buy gold as 50,000 rupees, or you could buy it in grams, but it is in multiples of 1 gram. So you will end up buying 8 grams or 9 grams if you want to be below 50,000. But you could fix and say every time the SGB opens in every portfolio at home, me, my wife, my children, my HUF, I will buy 10 grams of gold or 20 grams of gold, whatever, depending on that. So tax treatment is favorable. It is tradable after 5 years, but it is not sensible to trade, because if you hold it till maturity, you will get capital gains exemption. So please understand, even if you buy a 5-year-old gold bond in the market and hold it to maturity, there is no capital gains tax on that. So that's a huge advantage. So somebody who has money for 2-3 years can go and buy a 5-year bond or a 5-year to maturity bond. Transferability bonds will of course be transferable by execution of an instrument according to the provisions of the Government Securities Act. Like I said, this is a sovereign bond, right? It is just designated in terms of gold. So who is eligible to invest? Any Indian can invest. I don't think it is open to NRIs, but I could stand corrected. I am speaking more from memory than from a reading from somewhere. HUF trusts, I think corporates can also invest. I am not very sure. Check out on that. The denomination is 1 gram, multiples of 1 gram. The maximum, I mean, I'm just telling you this, it's about 4 kg. So that's quite a huge amount. Interest rates will keep changing for the bond, but today at the time of issue it is 2.5%. Will they change it with retrospective effect? I don't think so, but going forward they could make it 0 also, right? Tenor is 8 years with 5 years. For redemption shall be in rupees, right? You can't go and say, oh, I got 27 grams of gold, so please give me 27 grams of gold. No, that won't happen, but you will get the market price on that day for full purity. I think it's full 24 karat gold. So that's the price that you will get. You can take that money and go and buy the gold that you need, right? So, just a second. Gold it's been part of every portfolio, right? So 5%, 10%, whatever you want to hold. Some people may hold more, some people may hold less. In fact, in many people's portfolio, if they were holding 10%, the percentage of gold in the portfolio would have gone up, but for the fact that the equity has run up like anything, so therefore gold may not have crossed 10%. But if the equity markets don't do well, suddenly gold will do well. Is gold a great asset to hold for long periods of time? The answer is actually no, except that in India, gold has done very well simply because it is designated in dollars, and the dollar is actually appreciated. So whenever the dollar appreciates, your gold value, gold holding value goes up. That is what has happened. I don't think gold by itself would have performed, but then there is always enough craze among Indians to buy gold. So the lowest end also, an auto rickshaw driver or anybody, first thing they buy is some gold chain or gold ring or things like that. So we are attracted by gold, and that's a fact. Gold bond is 2.5% interest. Then you can get it in paper form or demat form. So fairly obvious, if you have a demat account, you should take it in a demat form. The tax benefit I spoke about, the 2.5% interest is taxable, but there is no capital gains tax. There is disadvantages. If you see, there is a 5-year lock-in, and on maturity you will get the amount, and I think on maturity you should give it up and then apply new, because on the matured amount you may not get your 2.5% interest, right? Can there be a capital loss? Yes, there is, just like there can be a capital gain, there can be a capital loss. Do I think there will be a capital loss over 8 years? I don't know, but I treat it more like an SIP, so I keep buying. So if there is a capital loss, it means what I am buying now, after 8 years I will be able to, I think I'll make decent appreciation. Am I worried about capital loss over a 8-year period? No. Am I worried about it being eroded by inflation? Yes, but 2.5% is there to protect. So if inflation is 7% and the price does not go anywhere, I still get 4.5%. I mean, I have lost only 4.5% and not 7%. Assuming a worst case scenario, but that can happen anywhere, right? It can happen in an ETF, it can happen in physical gold. So not your whole portfolio should have some hedge against inflation, some good growth, some stability, some constant income. So should gold be there as part of your portfolio? I am not getting into whether gold is very useful, but it is there in the portfolio of most Indians. So if you are like that, this is the best form of holding. Unless you wanting it for jewelry, you want to gift it to somebody or something like that, then you need physical gold. But this is one of the best ways of holding. I'm not trying to sell it, because it's not a commission-based product, or nobody is sponsoring this. But yeah, personally, I buy SGB whenever it opens. So should you. Through whom should you buy it? Look, I told you it's not sponsored. Thank you. Bye.